Man, we're recording right now. Tanya,
Garrett,
how are you doing?
good. How are you?
Good, good. I'm so excited to be on another great call with you to go over all of the fun information that people want to know.
All the fun stuff.
Yeah, yeah. It's also Casual Friday here today at the Cook Residence, Cook Chateau. So I'm just in a hoodie. I wanted to get comfortable, and then I wanted to talk about the things that are affecting, obviously, our worlds.
Right. It's a
Uh,
lot.
it is a lot, but I'm a real estate agent. You're one of the best mortgage brokers in
Thank you.
Central Alberta / Canada, probably. And I don't say that lightly. And the reason why I don't say that lightly is because I have had so many of my clients have feedback from what you were able to do for them. And so I'm going to start this conversation off by thanking you, Tanya, for working so hard for my clients. You're one of several brokers that is definitely my go-tos, and I always get such great feedback from my clients on how you are so on top of things, you work hard, and the process just seems seamless with you. So hey, let's just give Tanya a quick
Thank you.
clap.
You're gonna make me blush.
Listen, I want to just get straight into it today because I think we have a lot of information that we can give the public on what's going on with rates.
Mhm.
Not necessarily where we expect rates to go, because none of us have a crystal ball and we can't really go there because, well, I don't want to stick my foot in my mouth, and I'm sure you don't either.
No, I don't want to get in
Um,
trouble.
but I do want to talk about rates, what they have been doing, so the stuff that we do know,
Mhm.
and just kind of pick your brain a little bit on some certain topics. So let's just start out with the straight goods. Where are the rates sitting right now?
Okay, so insured rates, so meaning CMHC, not 20% down. With a variable, we're sitting about 5%, 5.05. So prime right now is 5.95. But what people seem to forget sometimes, the variable is we shop for the best discount. So the best discount right now is prime minus 0.90, some lenders 0.95. Okay, so that's where we would sit around the 5% or the 5.05%. Fixed just dropped, which is nice. It was up to about 5.29. It's down to
Yes.
5.15, 5.14 today. So that's positive. So that's, I'm just all about it dropping, but fixed has been going up and down quite a bit. So it's
Yes.
kind of all over the place too. Because I mean, a week ago I had 4.99, and then that lender even went up to 5.44. So it is changing
Yeah.
quickly.
We never really know what they're doing with these rates. It seems a little bit volatile, and for some it can feel scary. But at the end of the day, I feel like everybody's got to live somewhere.
Well, and
And
rent's going up so much, right? So it's like
yeah,
rent, like stats were 7%, and now they're saying they're going to get high as 10% of an increase. So we have to live somewhere. So why not pay your own mortgage, whether the interest rate's a little bit higher? I think what people are forgetting is they're looking at the interest rate and not seeing it as value. And they're forgetting that we didn't have the crazy increases like the rest of the country did. So buying
yeah,
in Alberta right now is like it's such a like promising. Oh my gosh, my words are getting messed up. Sorry.
it's okay, girl. It's okay.
Buying right now is a huge investment because we haven't had that happen. So
Yeah,
you're seeing it, I'm seeing it. We have so many clients coming in from BC and Ontario because they know, they see it, they've experienced it. We're so low that it's such an investment to buy. So people are forgetting, they're looking at the interest rate, but they're forgetting what the equity they're gaining when our market goes up.
right.
Right. And that's the
Yeah,
focus we should be in, is like the equity and the investment versus the interest rate.
yeah, I do think we in Alberta are sitting in actually a really sweet spot. I mean, we aren't seeing the hard influxes that maybe your Vancouver or your Toronto market are seeing. I was talking to one of my agent friends in Vancouver, and there was houses going $400,000 over ask, and within a couple of months, the market started to correct. So what happens there? It's pretty frustrating
Yeah.
for buyers. So I think Alberta is sitting in a lot safer place. We didn't see quite the highs and lows.
Yeah.
Yes, we saw some properties going quite a bit over ask, but not to that degree. And I think we're probably in a little bit more of a stable location than a lot of the places in the country. And now you might disagree with me here, Tanya, but would you say that if you are renting, you are paying 100% interest?
Exactly. That's a perfect way to look at it.
Right.
I
And,
love
and,
that
and
way.
so,
That's a great way to look at it for sure, because you're
yeah,
you're
so
paying
there's
so
so,
much mortgage.
Exactly. There's so many people kind of panicked about where interest rates are, which historically we're actually still sitting in a pretty sweet spot. But some of the renters that are staying in that game because they're too afraid to take the leap, well, they're paying 100% interest to somebody else's mortgage. So I think
And
it's
landlords are selling because they want to get out now because they're realizing a lot of landlords are also in variables. So what they did is sometimes cap their rent when rates were 2 or 3%, and now they're high, and now they're not actually making any money. So your
right,
landlords are selling, or they're going to be increasing tremendously because they're really losing out right now.
right. Yeah, it's pretty interesting, all of the movement that's going on in the market right now, and what's causing people to make certain moves or shifts with their real estate, either purchases or sales. So variable rates. A lot of people want to just stick in with their locked in rates just so they know kind of what the outcome is at the end of every month. But why would you say variable rates are maybe a little bit better? I don't know if better is the word as much as maybe why is it more flexible? I don't
I
know.
was going to flexible. So variable gives you flexibility. So for people who are nervous about the rates right now or paying a lot of interest, when rates do go back down, you then can just move it into a lower interest rate. So the biggest benefit that I really want to explain to clients before I lock them into a high fixed rates right now are dangerous because they're sitting at 5.15%. So that means, when they have said by 2023, we should start seeing some correction. So when we correct and we start going back down to 3.75 or 4%, all of these 5.25 are going to be like, I want to have that lower rate. Well, their
Right.
penalty will be atrocious. And
Right.
that's how we see things, even if something happens, like I see it all the time. People are usually in their mortgage for 3 years. So if they
Yeah.
want to take advantage of a lower interest rate, something happens, they need to access their equity, their penalty is going to be huge. And
Yeah.
that's why I always just want to explain that to clients before they lock into fixed. With a variable, it's a guaranteed 3 month interest penalty. So you can get out
Right.
of it no matter what with no,
Which
yeah,
it's pretty easy. So what would be the typical term that you're locking people in? 5 years?
usually 5 years is what people go for. Right now with fixed, I'm really saying to not real, like I would suggest to clients if they want fixed, no more than 2 to 3 years.
Right. I think there's some definite wisdom there. I had posted something a couple weeks ago about what Dave Ramsey was saying.
I
Uh,
loved it.
yeah, I mean, people are going to take it however they want, but
Yeah.
the reality is, don't be afraid to buy a house. Buy a house right now. Yes, sure, the rates may be a little bit uncomfortable, but in a couple of years, refinance. But what you're saying is don't lock into maybe such a long term. Go with a little bit of shorter to give yourself that flexibility to maybe
If
get
you're
out with
someone who wants
less.
to lock in. Yeah.
Yeah, with a
Yeah.
less of a payment.
Yeah.
Um, why? So okay, I've got relationships with a lot of people, some being brokers, some being people that work in banks,
Right.
and I do business with a little bit of everybody. From a broker side of things, one of the benefits, and you can correct me if I'm wrong, but you guys are constantly looking at your variable clients' rates to keep an
Mhm.
eye on things, where maybe in the banks they're saying see you in 5 years.
Well, and I think the truth is we're paid for each deal we do, right?
Right.
And the banks are paid a salary. So if they're
You
short
get paid
staffed,
money?
really so weird, hey?
Wait a second.
But the banks, it's a salary employee. They might be your lender that day, but then they might be gone 2 years later. They might be in a different branch. They might have new clients that they work with. So it's not really their fault. It's just, I feel like sometimes brokers manage their database better than banks. I mean, a prime example is I contacted all my variable clients when we had 1.64 and I said, get out now and lock in.
Right.
Right. And then they were like, no, we're paying 0.7%. We don't want to lock in. Not all of them. Some of them did say that. And
Sure.
now look where we're sitting. Right.
Right.
So we're always informing our clients of where rates are at. Even at renewal time, I know brokers are always on top of their database trying to get them rates, a year out, sometimes looking at stuff. Cause I know all my renewals in the next coming years, I've contacted everybody to say, you know what, maybe you pay the penalty and take the lower interest rate now because rates are about to go up high. And
I think that's there's so much value in that, Tanya, when you have somebody actually in your corner working on your behalf behind the scenes. I know even, in my side of the business, people want to know that we're working for them. Whether it's sellers, they want to know, okay, are you putting a sign in my in my lawn, but then also going and doing other things.
Totally.
And then for my buyers, they want to know that I'm keeping an eye out on that market. I'm not just sending them an auto email, but if I see a certain property that maybe didn't quite fit the criteria, but I'm like, hey, this would be a really good fit. They want to know that people are constantly working for them. And I think that's what probably has made you very successful is your deep care for your clients, but the work that you're putting in behind the scenes that I've really appreciated. I know my clients have as well. So that's a pretty big deal to me and my clients. And I know probably a lot of your clients are quite happy that you're hustling behind the scenes. And I mean, hey, we don't get paid unless we're selling either, right?
Well, and it's not even that, but you're right. It's the care behind the scenes too. Like we have different relationships too when you work with clients than I think you sometimes do when you work in the bank too. So I've experienced both sides. I mean, I think it's just personal. I was attached to my bank clients just the same. So I mean, it's the same idea, but for sure.
Yeah, for sure. No, I think it's interesting where all the rates are. I think it's been a little bit of a fun time to navigate. But if we were to look historically at where rates are right now, we're actually not sitting in a bad spot. Like, if you want to talk facts, what was 2007 looking like?
July 2007 was 6.25.
And we're sitting at what?
6.25.
Right now?
And right now we're 5.95.
All right. So there's a lot of panic, but we're still, like in the last 20 years, we're still sitting in a pretty low.
And that was 20 years ago. And literally that's the highest it got. And by January, the next year in 2008, it started to drop. Okay. By the end of 2008, we were as low as 3.25. So if you're in a variable, right, and let's say you're prime -1 and variable is 3.25, you're paying 2.25. So that's the stuff we have to keep remembering. And I think like we've chatted about it, your rate was 1.2%.
I liked that.
I know.
That's what I wanted.
That's why there's so much frantic because everyone was paying 1.2% and now it's gone up. And we have to remember that those rates weren't realistic either, right? So,
well, they weren't. And I think managing expectations is such a big part for us and helping our clients understand, listen, we're basically being given a gift of low interest rates for a very small period of time.
Right.
So take advantage of it, but understand that it's not going to sit there forever. And it's not the end of the world if it starts to go up a little bit.
Right.
We're not in the 1980s. Yes. Let's all hit the panic button if our interest rates goes up to 20%.
Right. Well, I think what we're forgetting too, I've had this conversation multiple times about the 1980s and houses were $50,000 to $100,000. Right. We have a lot more borrowing than we ever have. Canada's debt is high, which is all based on prime. So if they go up that high, we're all going to be homeless and everyone's going to be in bankruptcy, and that they don't want that either. Right. So, I mean, some people don't trust our government and think that's what's going to happen, but we have to be realistic in the piece that that's not going to, we're all in way higher priced homes. So they've also got to manage those situations as well. So, I mean, they're smarter than that. But I mean, it's not just, and people have home equity lines. So the biggest thing now, if you're in a home equity line, it's time to get into fixed because home equity lines are usually prime plus, right? So when you're seeing those situations, it's good to start moving things around a little bit. I want to touch base on Dave Ramsey point. Oh, sorry, go ahead.
Oh yeah, no, go ahead. Touch on that.
We sort of talked about it a little bit, but we didn't get into it too much. So that's the thing to remember is with variable, you're in it. And in year 2 or 3, we can refinance you or change your mortgage around if we get really good low fixed rates, right? And then we have the low penalty. Again, I know I talked about a little bit, but in a fixed rate, we wouldn't be able to do that because the minute they drop down 2%, high fixed rates is when you have high penalties. So
Yes.
even through COVID, we never thought, I had clients that we never thought rates would get lower than 2.44, right? Going from 2.44 to 1.64, their penalties were like $9,000, $10,000. So imagine if we're going 5% to 3%, right?
So variable sum is just great.
It's just more flexibility.
Yes, more flexibility.
Can't favor one. It's just more flexibility. I did variable too. So
that was a very professional thing to say, Tanya.
I try sometimes.
You can't favor them. I love both platforms the same. You know, I am on a variable rate. I'm not too concerned. My mortgage is still quite low considering where we're sitting. Now let me get your professional advice. Are you ready?
Yeah.
I didn't even prep you for this question.
Oh, Garrett.
So for people on variable rates, if this interest rate was to drop by 2%, would you tell them to lock in?
They have to, it's honestly for my clients even deciding variable to fixed. Like, so are you saying fixed rates drop or variable
So
drop?
if fixed rates drop and there's people, for example, me,
Yeah.
I'm on a variable rate. If those fixed rates drop, would you recommend those type of clients to lock in? So say it drops down to a 3 point, whatever, 3.7. Would you be recommending to lock in at that point?
I think they have to feel comfortable because their variable at that time is probably also minus the discount. So variable and fixed kind of run around the same time. And so if you got a 1% discount, then you're paying also 1% less than fixed. So it has to be their comfort level. It does. But if I have clients that are like really not enjoying this ride, so those would be the ones that I would say lock in.
Have I texted you at all about interest rates over
You're
the last 6
fine.
months?
You get it. But I have lots that are really not enjoying it. So to the point, I just had one lock in at 5.25. No matter what I said, he's like, I appreciate your education. I just can't do it. Right.
Yeah.
So I respect that. We locked him in.
Risk appetite a little bit, right? And everybody's gonna kind of carry it a little bit different. I can see maybe people holding these higher priced mortgages getting a little bit concerned about where these rates might go, and they just want to lock in and just know what they're going to be getting themselves into. So in regards to like secure economy, where would be the ideal interest rates for fixed rates in like a secure economy?
I think it'd be around like 3.65, 3.5.
Okay.
Like, I think, I don't know, hopefully not, but I think gone are the days that we have like the 2.44s and like we always were around 3% for a very long time. Before COVID, like just before COVID, we were low for about a year, but it fluctuated a lot. It was like 2.44, 3.65. It did go back and forth. Before COVID, we were getting up to 4% fixed, and variable was starting to go up quite a bit. So this was all happening before COVID. And then unfortunately, I really think they just kept fixed rates way too low for way too long.
What if I still want a 2% interest rate? I need you to change your attitude on whether or not it's going to drop.
I will believe we will get that low again, but we can try to pray for that, but I'm not sure that's going to happen just in a while. But
no, that's fine. Tanya, I always think you have so much good value to bring to people in regards to this conversation. And to be honest, some of it is just way over my head. I'm a real estate agent. I try to stay in tune with as much as I can in regards to the rates. But that's not my profession. I am a matchmaker. I love setting people up with the right homes. And my dogs hate this interest rate right now.
Sounds like someone's talking.
Do something different, dogs. Sorry about that. But anyways, I think you have so much good value to bring to people, and it's important to put it out there.
Well, you do. So I thank you for everything. Thank you. I love your interviews. You just pumped me up. So thank you.
One of my great gifts is I'm by nature an exhorter. So I love to exhort people. I love to cheer people on. I don't care if they're in the same industry as me or not. I'm probably one of the biggest cheerleaders of most
You
agents
are.
in my city, because you know what? At the end of the day, there's plenty of business to go around. And I love doing business with obviously like-minded people, people that are actually, you know, caring deeply for people. This is a big decision for people.
It
It's a
is.
big decision. Well, number one, for them to trust anybody in the industry. They've
Mhm.
got to make that decision. I think you're a pretty trustworthy person to do business with. But then they got to pick a house. And that's a lot to do. So to have people like you in my corner and obviously the other agents in town, man, I love doing business with agents in Central Alberta. There's so many good agents, and I feel very privileged to be a part of such a great circle. What would be your number one piece of advice for buyers right now?
Flexibility.
Mm,
So, I don't try to encourage my clients to go one way. I give them facts on each side, but I mean, the flexibility of variable is why I would stick with variable right now. Um,
yeah,
and I really think, like, I talk to clients all the time. I think we really need to remind everyone what's happening in the country is not happening in Alberta. It is a great time to buy here. We haven't even, like, honestly, like, our prices haven't even gotten to when they were inflated in 2008. We're
yeah,
still way lower than that. So I think it's such a great time to buy. And so anyone I actually get to talk to, I try to say that, and I try to encourage that on my Facebook, that this is the season to buy. It really is. And
yeah.
especially coming into winter months, homes are going to be priced a little bit lower. So keep buying. It's a great time to keep going with it. So,
Well, and right now there's actually a lack of inventory.
mhm.
There still is very low inventory. Some of the properties that are on the market maybe have been sitting for a little bit longer. So when there's a lack of inventory, there's a frenzy,
Right.
but the interest rates have kind of offset that frenzy.
Hmm.
And so right now, buyers not just have the opportunity to take their time a little bit more, but it is just a good time to buy. And I think one of the things, not that I want people to take their time. I just
No,
want just buy a
but
flipping
things
house.
are going pretty quick because I have
Things are
buyers
still moving.
like under
Things are still
300. They're
moving.
like, they're gone. I can't even get a chance to look into it. So it is going pretty quick still.
Yeah, and it's kind of caught me off guard a couple of times where I've found myself in multiple offers even right now. And I'm like,
Hmm.
oh, I thought that time had left us.
I
But
don't think so.
it has settled down for sure. It's settled down.
Yeah.
I think one of the biggest things you said there was uh Alberta market is so much different than your Vancouver and Toronto. And a lot of the information that is pulled for Canada is coming out of those markets. And so it's really important to just understand where we sit in those markets, where we are in Canada. So many people are coming to Alberta for
Hmm.
that very reason. We're affordable living and actually even just good jobs here that
Yeah.
create such a great lifestyle for families. So
Well, I think
variable
we
rates.
believe our wages are going to go up, and they have started going up. Right. We're
Yeah,
also
well,
in frenzy where there's not enough employees. So there's
yep,
some things we have to, like, look at both sides. Right. So,
for sure.
mhm.
Um, no, that's really good. I wanted to, what was the one thing? Sorry, I gotta just check this one thing out. Somebody had posted something not too long ago, even in regards to variable rates, and it actually being, even though the rates are a little bit high, they are more people going with variable rates right now
Mhm.
across Canada. And
Mhm.
I found that interesting because I guess people are kind of expecting maybe a drop in the new year.
Well, and I think people who choose variable are well aware of investments in markets, right?
Right.
There's highs, there's lows. Overall, you pay less in a variable. It's been historically proven. So we're in high season, right? We got really spoiled, but it's going to go down. So how I kind of explain it is you can go 5.15 and basically pay that bank your security interest. So they're paying insurance basically on them
Right.
feeling secure at night and knowing they're locked in at 5.15. But then when what goes down again, they're gonna be like, oh, so they're paying just for security. So it's like paying insurance
Right.
on something that you don't need to pay on. The nice thing about variable is when it goes down, so does your mortgage payment.
Yeah, I think that's awesome. I've got one last question and then we're going to peace out because I think we have bombarded people with
Yeah,
so
less than a
much.
minute.
Oh, less than a minute. Okay. Rental properties,
Yeah,
down payment. What does that look like?
20%.
20% unless
Unless you're
you're
gonna live in it. So we know if you're buying it as a rental, it's 20% down. But
so
right.
suited properties.
Suited property is 10%. You can live in the property and also rent out the basement, and we can count the rental income.
Not enough people know that. That is great
And if someone
information.
just buys it without a renter in the basement, they can still do 5% down. But I'm just like, if we need the extra income.
Awesome. I love that. Tanya, you are always so wonderful to chat with. Thank you for all this great information to pass on to the public. I look forward to doing more business with you in the future.
I love
And
working with you. Thank you.
keep crushing it.
You keep crushing it too.
All right,
Thank
later.
you. Bye.